I'm going my way, down on the freeway, after I leave your house. And I know you're texting somebody else when I look away to the right. I know this is the ending. But I'm holding on to you. We would be better off as strangers. I would be better without you. But in the summer, things are changing. I get intoxicated by you. When I come over, you pull me closer under these neon lights. My vision's hazy, your love's so crazy, keeping me up all night. I know this is the ending. But I'm holding on to you. We would be better off as strangers. I would be better without you. But in the summer, things are changing. I get intoxicated by you.
Here I am, know it's been a while. I was in denial about my love. Here I stand, I know I walked away. Had to find the person I'd become. I was high and I was low, moved through mountains, rain and snow. But I felt that I was further from the truth. And one dark and stormy night, rolling thunder, flashing light, heard a whisper in the night, and it said, you should go back home, go back home, go back home, go home. It's been there all along. You should go back home, go back home, go back home, go home. That's where you belong. You should go back home, go back home, go back home, go home.
You're listening to Chill Your Mind Radio.
Here I stand, I know I walked away. Had to find the person I'd become. I was high and I was low, moved through mountains, rain and snow, but I felt that I was further from the truth. And one dark and stormy night, rolling thunder, flashing light, heard a whisper in the night, and it said, you should go back home, go back home, go back home, go. Just been there all along. You should go back home, go back home, go back home, go. That's where you belong. You should go back home, go. You should go back home, go. You should go back home, go. You should go back home. Been there all along. You should go back home, go. You should go back home, go. You should go back home, go. Go back home. That's where you belong. That's where you belong. That's where you belong.
Take me anywhere where I've never been before, to a place unknown with you and the stars beyond. Take me anywhere where we've never met before. I wanna let you know that you bring me closer to all that I dreamed of. You're taking me higher where I feel home. Oh, you bring me closer to all that I want, yeah, and I don't fear nothing, nothing at all. Oh, took me everywhere, took me everywhere. Oh, took me everywhere, took me everywhere. I am danced in the high, moving slow from side to side. I'm letting go, I'm letting go, running wild in all directions, breaking free is all I wish for in my soul, in my soul. Take me anywhere where I've never been before, to a place unknown with you and the stars beyond. Take me anywhere where we've never met before. I wanna let you know that you bring me closer to all that I dreamed of. You're taking me higher where I feel home. Oh, you bring me closer to all that I want, yeah, and I don't fear nothing, nothing at all. Oh, took me everywhere, took me everywhere. Oh, took me everywhere, took me everywhere.
Hey, welcome everybody. Hey, I'm going to get started in a couple minutes. I'm just going to get some water and open up.
Take me anywhere where we've never met before. I wanna let you know that you bring me closer to all that I dreamed of. You're taking me higher where I feel home. Oh, you bring me closer to all that I want, yeah, and I don't fear nothing, nothing at all. Oh, took me everywhere, took me everywhere. Oh, took me everywhere.
For more music, check out our Spotify and YouTube playlists. Enjoy.
Alrighty, everybody. How's it going? How's it going? Happy, it is Tuesday, right? Just want to make sure. Yeah, it is Tuesday. How's everyone doing this week? Gonna get started. If you guys have been trading yesterday and today, I'm sure you've noticed that it has been sideways. There's not a lot of volatility in the market, and I mean it's pretty evident as to what the mindset is of the market. So we're going to get into it. I'll break it down. I'll get into, I know Gary wanted me to go over the DXY correlation. Again, we'll do that. And we'll kind of just do some quick basic stuff before we jump into the charts. All right. My back is killing me, so I may have to go and stand. I bought one of these little portable laptop stands that I can stand and AirPlay everything to my big screen TV, so I may have to do that in a little bit. But let's get right into it. Let me share my desktop. Let's see, bam, desktop 1, 2, or 3. We're gonna go with 3. Okay, there we go. I am recording. All right, can you guys hear me? I just want to make sure my mouse. There we go. Now it's on. All right, so let's take it into here. All right. Obviously, let's go for the weekly. Coming into tonight, right, on Forex Factory, we're going to perfect. We're going to look over the news. So really, the only thing coming out is some Australian news, and I really don't think there's going to be a lot of volatility in it. Well, I don't think there's going to be a lot of volatility in it. The last couple of these releases really hasn't shown a lot. So I'm not looking for a lot of volatility out of the Australian dollar today. One of the things I am looking at, obviously, the huge things that we should be looking at are right here, right here, FOMC. That is going to be the big thing for tomorrow, and I'm almost positive that's why a lot of the markets have been sideways. They're kind of waiting to see what the Feds are going to say tomorrow at 2 p.m. To really give us an idea. And then, of course, for anybody that is trying to trade oil, we got oil inventories here coming out tomorrow at 10:30. That's really the only thing that's going to be really moving the market. We should see a little bit of volatility on the dollar side, especially for quarterly earnings. You can already see they're pricing in a negative 4%. So I'm curious to see how that is going to play out. But overall, I am looking at a lot of US dollar pairs this week, and we'll get into it, okay? And really, even the statement isn't going to be the big thing. It's actually what Jerome Powell is going to say during his press conference that's going to influence the market. So you can bet that tomorrow afternoon the indices will be hopping, unlike today that they were kind of just ranging. And there we go. And then lastly, the only other thing I'm personally going to be looking at is, of course, the big unemployment claim numbers right here on Thursday. You can see they're kind of already projecting only 3.5 million. I mean, it's impressive, the numbers that they've been tallying up. So that's really that's all I'm looking for. We do have a little bit of Euro news going into Thursday, that London, New York crossover. So we'll see how that goes. But for the most part, I'm looking for tomorrow what's going on. All right, so FOMC is really making the markets kind of just go sideways. And then, of course, I don't know if you guys follow this. This is just what I like to go to for earnings, as far as the earnings releases. And you can kind of come in here, and what I like to do, obviously, I like to trade the 3 big indices. And you can see the Dow had some huge earnings coming out today. And then tomorrow's the big one. Microsoft is releasing, and then Apple is on Thursday. So these two are going to be huge. The reason the earnings quality, the difference in them, I don't know if you guys have ever really looked at the Dow component, but there's 30 companies in the Dow 30, but not all of them are weighted the same, right? You can just do a quick, simple search, right? Jones. You can just do a simple search, and it'll break down what each company is weighted. So you could see the top company is United Health Group, and they're 8.35% of the index. And of course, the last one is the Dow component at 0.98. All right. Home Depot should be up. Yeah. I mean, sure. Just remember, a lot of people, I mean, I know, I've been doing some home improvements, but a lot of people are hesitant to spend money. I know, my dad works for a newspaper. He's on a furlough. So I know my mom and him are extremely being frugal. Even some of the big ones like McDonald's, I can tell you, I have yet to go to a fast food place to go to their drive-through. Most of the stuff we're doing is ordering in. So, but these are huge things, right? So obviously you can see we've got some huge earnings being released this week. This one here is Chevron and Exxon are not going to be very good. I can tell you that. Same thing with Visa. Okay. A lot of people aren't, you're not going on huge trips. You're not spending money. Everything is necessity only. So we'll see how that goes. And then of course, the S&P was huge. Just look at this week, all of the releases that came out today. All of these were released today. So that's why there was a lot of just sideways movement. I kind of tried to get into a couple of them, kept just, getting frustrated with it. So I was done. Boeing is in big trouble as well. Well, I mean, I saw the lawsuit thing, but listen, at the end of the day, when you look at Boeing, okay, there's only 3 airplane manufacturers in the world. Boeing is one of them. And as long as, as long as militaries still need fighter jets, that is the main focus for Boeing, is compiling military assets. So, but we'll see how that goes. I mean, you could see going into tomorrow, there's a lot more S&P 500, and then going into Thursday, there's a lot more. So, I've had this on my calendars. I've been looking at them just to see. All right. So let's kind of get into some of the stuff. And I said I would go into DXY first, right? So I'll tell you what, let me hide this. Okay. So everyone, that's been with us for a while has a really good understanding of why the dollar index is significant. Okay. If you just come here and type in DXY weights, okay, you'll see that there are a couple of a couple currencies that are heavily weighted, okay? And here they are right here, okay? There are a couple currencies that are heavily weighted. The euro is by far the most weighted against the dollar index, okay? So really the only thing you really need to worry about or understand from that is whatever the dollar index is doing, the euro would be doing opposite. All right, so if the dollar index is going up, the euro is going down. All right, and then from there, I mean, you could see that the Swiss franc has 3.6% weight against it. Some of the currencies, the anti-per diems, right, you don't see in there are the New Zealand and the Australian, okay? They don't have any significance against the dollar currency. It's like, I think the Australian dollar is a 0.05% or something the last time I actually looked at it. So understanding that all of these currencies make up the weight for the dollar index, that is why I like to trade US dollar pairs and I like to trade euro pairs, okay? Because I have a benchmark to go off of. And to put it in comparison, right? If I do this, if I come here and I put dollar index on the top, okay? Dollar index on the top, let's just do this. Let's go to a daily, right? We'll do it like that. And then I'm going to come down here and I'm going to go to, I had some time on my hands, so I reorganized all of my stuff. And I come here to the euro, right? If I come to the euro index, okay? So this is the dollar index and this is the euro index, okay? Do you notice how they are mere opposites of each other? Right? Mere opposites. I mean, almost to a T. And then by doing this, if I come to euro, right? If I come to euro USD on the daily chart, okay? Do you see how euro USD is the exact opposite of the dollar index? So if I have two benchmarks that I can trade, essentially I can use two charts to get an idea of how euro USD is going to move, okay? So that is why, and specifically for Gary, this is why dollar index is so pivotal for me, because not only do I understand what the US dollar crosses are going to do, but by default, I know what the euro pairs are going to do, right? Now, doesn't necessarily mean that if dollar index is bearish, that euro NZD will be bullish, okay? It just means that the euro strength in that currency is going to be extremely strong, where then you have to go ahead and analyze what the other cross is doing, okay? But, you know, that's why euro USD has become one of my favorite pairs to trade, all right? Does that kind of give you an idea now, Gary, as to why the correlation between dollar index and like euro USD is so important? It is the exact opposite, the exact opposite. And everyone else on here, you know, hopefully you guys also understand that. All right. So with that in mind, let's look at the dollar index, right? So I said from the start of the week. Yep. Yeah. Absolutely. Yeah. It's the exact opposite. You're in EU. Yeah. So am I. I took a half lot just to take it. I'm about ready to put my stops at break even, but yeah, I took a half risk on it. So going with euro, going with the dollar index, okay, dollar index here. And obviously I am ultimately on the higher time frames, right? On the higher time frames, I am still bullish, right? You can see that we have been respecting the down candles. One of the things I have, and I said that I was looking for, was for bearish dollar going into the week, right? Bearish dollar going into the week, and then for us to turn around. And this is kind of what I was looking at, right? We started the week in this raising channel, in this flag pattern, right? This bear flag. And my targets were this open gap that we had from the previous week, as well as some of these inefficiencies down here. All right. Ultimately, what I was looking at is this last down candle, right? And what I was looking for is, see on the daily time frame, this last down candle right here, okay? That down candle comes in, and this is the 50% mark of it, all right? And that's where I wanted to see dollar index trade into, just like it did off of this one here, okay? Trade into it for us to get up into some higher prices, at least to mitigate some of this imbalance up here. Okay. Now going into, and I know there's some newer folks on our team here, so going into the concept of, like, when you hear me say imbalance or displacement, what I'm looking at, right, is this right here. Okay. Do you notice how this candle and then this candle, these are huge impulses in the market? Okay. The market doesn't like to trade like that. Okay. The algorithms like nice and even trading up and down, up and down. When there's a huge impulse, whether it's bullish or bearish, right, it causes a displacement or an inefficiency in the market. And ultimately what this means is that there was no buying done in this candle. This was all selling. Okay. And if you think about the market as a scale, right, with buyers on the left and sellers on the right, it needs to be even, right? It needs to just, if the market's going to come down, it just needs to tip side to side to get down. When you have these huge impulses, the market needs to return to these areas to balance out those inefficiencies. And that's what I specifically like to target for entries and for take profits, for points of interest that I like to identify. Okay. So with dollar index, I was again looking for obviously the break of this channel, get out of this bear flag. Okay. And for us to come down, and you can see we ultimately mitigated, right? We mitigated out of that gap that was created here. Okay. And specifically, this is the gap I was talking about, this gap that was created on that Sunday open on April 15th. Okay. There's no time frame for imbalances to get mitigated. Okay. A perfect example, oil. The reason I said oil was going to $10 is because there was a gap there from 1986. So that's how long that gap stayed open. But the gap needs to get filled. And if price, just like oil, oil was dropping. When oil was at $60, I said we're at least going to $15 to $17 because I saw that willingness for it to get down there. And once it got down there, of course, if we're down there already, why not mitigate that imbalance from 1986? But so essentially, we've cleared out this gap, right? Cleared out this gap. So this gap is now kaput. And we've also taken the liquidity, right? The liquidity out of these lower equal lows right here. All right. So my next target of interest that I'm looking at, oh, hold on. My little back thing stopped. There we go. I've already highlighted it, but you can see right here, this one candle is that last up candle, right? That last institutional candle where before the market just fell off during London session last night, right? Right at 3 a.m., dollar index just dropped, okay? What I am looking for is, now that we've essentially mitigated this right here, I want to see if we can come back up and mitigate out of this last down or last up candle and then return to somewhere into this inefficiency, right? You could see this imbalance, this displacement caused by this one H1 candle, right, created this inefficiency in price. So I'd like to get that inefficiency, which also couples with a daily institutional candle, 50% of that candle, if we can get down into there. And that's going to give me that bias for a bullish Euro USD, a bullish Pound USD, a bullish Australian dollar USD, right? And then also looking at some gold opportunities, okay? I just missed gold today. I was frustrated as crap, but it is what it is. I haven't traded gold in months, and today I saw a great reaction. So would you, let's see, so like, would that small move to that institution not mean EU move lower past that 50% entry that it reacted off of? Yes, correct. And that's why, like the trade that I'm currently in on it right now, I'm actually going to move my stop loss to break even because I'm up. I got in off of this 88.6, so I'm going to move my stop loss to break even. And the only reason I got into this is because it came perfectly into 50% of this candle, and I did take a half lot on it. I've got a target in here and I've got a target in here that I was looking for. The main reason I was looking at this setup is you could see this candle right here that came in, that I got into my first entry on that ended up going to break even. This candle came in right at 11 o'clock in the morning Eastern time, okay? Which is that London Frankfurt closure time, right? You could see we traded right into the top of that last down candle. The reason I wanted to take it was because it's all about timing, right? That London closure is when I wanted to get into the trade. I do not want to get into the trade, and I did not want to get to the trade at 4 p.m. So, I waited till the spreads died down, like right around 5:30. I actually got into the position right here is where I got into the position right here, right at 6 p.m. And I threw a half lot, just to see if we do get some bullish momentum. I don't want to miss out on the trade, and obviously I'm taking it back up here. Right. So you can see, and you know what, I'll get into that as well. Like I like to see price, once we mitigate out of a position, we move away from it. So, we'll get into that. Let me go back to DXY real quick, and I'll just kind of give you the bias that I'm looking at, right? So ultimately you can see we gap down, right? We gap down on the DXY, but I'm looking, hopefully in Asian session, we do get that mitigation into this area here. Okay. And ultimately this mitigation, right? You can kind of determine that dollar index is lagging behind Euro USD, right? And what do I mean by that? Well, if I put them side to side, right? If I put them side to side, you can see on the 1 hour chart, right? This is the 1 hour chart. This area, this candle, right? This candle right here, this last down candle has already been mitigated out of, where this candle on dollar index has not, okay? So that's kind of why the dollar index is lagging slightly behind. So that's why I'm going to just protect my trade, go to break even, just let it ride. If I get stopped out, no big deal. If I get stopped out, I know we're coming for this right here. Okay, I know we're coming for this right here, because you can see on dollar index, this area right here, right? This area right here is already kind of been mitigated out of, okay? So that's how I'm going to play it. All right, that's how I'm going to play it. So let's get into it. This is what I'm looking at. All right, and if you guys have charts that you're looking at, throw them in. We'll look at them. I honestly, I'm not looking. These are the only charts I'm personally looking at for this week. So if you got something else, let's take a look at it. All right. So Euro USD, right? Euro USD. This is what I was looking at. Okay. So obviously, if I am if I'm bearish intermediately on the dollar, I've got to be bullish, right, on Euro USD, okay? One of the key things I'm looking at for Euro USD, right, as a target, if I'm bullish on it, is this, I guess I already have it. So this candle right here, this daily up candle before we sold off, okay? And that daily up candle has this right here, this 50% of the daily institutional candle. That is going to be my area of focus that I want to target, okay? When we come to a 4 hour, right, I was ideally looking for these 2 points of interest, right? These 2 points of interest. And the reason I was looking for that points of interest is one of the things I'm looking for an entry is, where was the money? Was there a run on liquidity, right? And if I come to the 1 hour time frame, it's a little easier to see, right? Let's back it up a little, right? Let's go right here. Okay, so when we were here last at the beginning of the week, right? You can see that we had equal lows, right? Equal lows, equal lows. So again, what are retail traders doing, right? Retail traders are buying at support levels because everyone thinks this is support. And then what happens? That big FU candle that drops takes everyone out that was buying, hits their stop loss or break even. And anyone that was trying to play a breakout, right? Like, oh, I'm going to break and retest this and take it down. We're ultimately either the stops are ran and now they're in drawdown, or they took a loss, okay? So ultimately, that's what this accomplished. Can you change your lot size on the app or only on the computer? What do you mean change the lot size? You mean close out partials? Yeah. I don't know, but hold on real quick. Let me just modify my position here. So I got in, let me go. So I got in at 2.5. Let me go to 2.7. Yeah, you know what? I'm not even gonna worry about it. I'll deal it in a little bit. It's not even 10 pips in profit yet on my end. Okay, so anyway, yeah, you can do whatever you do on the app, you can do on the desktop. So I personally don't use MetaTrader 4 on the desktop because I have a Mac. You know, I either do, you know, like I have a new broker that I'm using that it's embedded in TradingView, or on the other broker I have, I just do it on the phone. But anyway, so you can see what we had here was a run on liquidity. Okay, that's what this yellow X means. It's a liquidity grab. Okay. And you can ultimately see from there, what I was looking for was price to move swiftly away from it, right? This is what I'm looking for. Liquidity grab, boom, we move away. And then I wanted to see us come back and mitigate out of this. And we never did, right? We never did. You know, so ultimately, I was looking for an entry. We never got it. But what I am looking for now is this, right? And this is why I set up the trade setup that I was looking at, right? Pause it here for a second. Okay, so you can see, right, when we were here on the 27th, right? So ultimately yesterday morning, okay, we literally just went sideways. And it was frustrating as crap because I really want a euro to come down. But we just built orders, okay? Did I have a liquidity grab at the top as well? What do you mean? Right here? Well, I mean, this grabbed this liquidity here, but I'm more interested in this stuff up here. This is where I'm interested. Yep,
Okay.
that's my.
This one was grabbed.
Yep, yeah, this was grabbed right here. This was grabbed by this. So, but this right here, I really wouldn't count this because I mean, I guess you can go on like a 5 minute and possibly see maybe a couple candles, but this is my target right here. These equal highs up here, you know, ultimately are where a lot of sellers got into the market, where there's a lot of orders, and then obviously there's a lot of buy stop orders resting above it. Okay. So ultimately, what I was personally looking at, right? What I was personally looking at was, okay, we've got equal lows. I want to see that liquidity grab, right? I want to see price come down, grab some liquidity, and bam, there's that nice big FU candle to take everyone that was out of this market out and to trigger any buy stops, okay? So this is the candle I wanted to play off of right here, all right? This is the candle I wanted to play off of. You can see immediately money got, and this is how I know for a fact that this is a true institutional candle, because we have that nice downward momentum and immediately buyers get into the market and shoot this sucker up, okay? That's what I'm looking for, all right? That's what I was ultimately looking for. On the, man, TradingView has been really slowing down lately. As soon as it opens up here.
Mike, you're cutting in and out.
Am I? All right. Well, maybe it's, you know what, bud? Maybe it's my wonderful Blue Stream internet. So hold on. Bear with me here. Okay, here we go. You guys there? Can you guys hear me now?
Yeah.
All right, perfect. Yeah, bro, my internet sucks. So this is like the 5th time today. So anyway, okay, on the 1 hour, what I'm personally looking at, right, is this one candle right here. All right, let me delete this sucker. I'm looking at
We lost you again, man.
How about now? You guys got me?
Yeah, you're like cutting out. You sound like a robot.
Oh boy. All right, hold on. Let's see if it catches up. Yeah, it's my internet. Like I see it giving me the unstable internet thing. So I'll go slow, and if you guys, if you miss something, just hit, say to repeat it. All right. Ultimately, though, what I was looking at is this nice FU candle that came down to grab liquidity. Okay. And then immediately you can see the evidence that buyers got in the market and just took this to the moon, right? That's what I'm looking at, all right? So this was a sell to buy. All right, give me a sec, hold on. Let me know when it comes back. Can you guys hear me yet?
Yeah, we can hear you.
Oh, all right.
It's just like it's like glitchy.
Yeah, I see my Fire TV keep going out. So, okay. So anyway, so buyers get into the market here. This is perfect. This is what I'm looking for, right? I'm looking for this engulfing candle. And now we just need to get this mitigated, right? We need this to get mitigated out of. Let me delete some of this stuff here. Give me a second. Okay, so we need this to get mitigated out of, right? This selling position. So for anyone that's confused, ultimately, the market found these equal lows, right? Everyone knows that this is going to be a buy. So what do the institutions do? They push price down to buy it up. Now they need to get out of this order, okay? Because institutions can hedge, right? They can be in both a buy and a sell at the same time. So what they will do is they will take the market up and have to return to hedge out of this position. The theory.
Mike, we keep losing you, man.
Oh,
we haven't heard anything you said the last 2 minutes.
Oh, all right. Hold on. Oh yeah. I'm going to give you guys the number to Bluestream Wireless, and you guys can call and complain. It's horrible. All right, you guys have me now? Anything? Got me? All right, sounds good. We're gonna try it again. Oh, I love Bluestream. Okay, so in a nutshell, right? The theory is, especially for people that are confused, all right, everyone knows. Nope, we gone. All right, we're back. All right. Eventually, the internet company is going to get this down packed. All right, so for anyone who's confused, right, everyone knows Euro USD is going bullish, right? Dude, this is the only internet I can get. The city I live in is like the Gestapo, man. They don't allow other, especially where I'm at. I'm too far away, and they won't give permits for them to run their fiber optics closer to my house. So this is all I got. All right. Yeah. So again, everyone knows this is going bullish. The institutions need to take everyone out, okay? Because for them to make money, they need to take buyers out of the market. So this is what this candle pretty much induced. It took out all the buyers that were here at the support level saying, we're going to go. Nope, we're out. And then it caused anyone who had sell stops here, okay, to get activated, and now they're in drawdown. So this candle gives me evidence that buyers got into the market and we need to return to this area, all right? You can see ultimately we came up, we created structure-wise, right? We created a new high, right? We broke above this high. So we made a new high. And now, okay, now, oh, stop, there we go. And now you could see my little bullseyes where I was looking to take my entries, right? So from low to high on a regular fib, right? On a regular fib, you can see 71, 78, 88.6, okay? The 88.6 is perfectly lined up with the 50% of this H1 candle, all right? This was my bigger position that I wanted to take. Right before London closure, I did take a smaller position off of the top end of the institutional candle right at the 78.6. I ended up breaking even. I made, I think, like 8 pips off of it. It did at one point go, what was it? It went 18 pips in profit. I moved my stop loss up, and then it ultimately got hit break even. And then again, I got in right here, right at 6 o'clock. Okay. So that's ultimately, oh yeah, we are missing some candles. So ultimately, that's what I'm looking for. I'm looking to see evidence of buying. And you can see that even though we're in Sydney session, which moves so flipping slow, we did mitigate out, and then immediately we moved away from it, right? We moved away. So here we are at current time. And this is what I like to see. I like to see, I don't like lollygagging, right? This kind of gave me a lot of false hope that, you know what, this is going to get ran and we are going to come lower, right? We are going to come lower. But now we do have 4 straight hours of buying pressure. The one thing I am being cognizant of is this candle right here, okay? Because this was that last up candle that potentially the market would need to, to mitigate out of. This is how you would have charted it? Awesome, man, awesome. Okay, so, my risk was right below these previous lows, okay? My entry, the better entry was right here at the 88.6, 50% of that H1 candle. The only thing that didn't line up for me was the time of day, right? I didn't want to get in at 6 p.m. I would have rather have gone into this maybe 2, 3, 4 o'clock in the morning, or even better, 5, 6 o'clock in the morning, right? Eastern time. That London crossover is where I wanted to get into this. But ultimately, my targets, right, that I was looking at are these equal lows where all the money is at, right? Where sellers are at in the market. That's where I want to take it to. And you can see on the ROI side, right? On the ROI side, this is a nice, almost, well, a little over 6.5 to 1 ROI, right? So on a 1% risk, I'm going to make 6.5% on this. It is what it is. I am very cognizant of what's going on with this. I would rather, I'd like to see, and I've got my alert set right here to move my stop loss once it breaks up to these highs. So hopefully we can get it, and then I'll protect my position. So that's EU. That's what I'm looking at. All right. Now, if for some reason I do get break even on this, my next area of focus, right? My next area of focus is going to be right off of this candle right here. Okay. This is what I want to look at. So when I'm charting it, obviously I come right here. I go candle open, a candle close, and I find that 50% mark. All right. 50%. There we go. So that's going to be my next area of focus, and I can potentially find a tighter stop when we get down there. But for the right for the moment, you can see we're getting a nice engulfing H4 candle, which is what I like to see. Right, I like to see that. Okay, so that's what I've got on Euro USD. All right, and I'm just going to go down the list here. And like I said, if you guys have anything, throw it in there. All right. Now, pound US dollar. Right, pound US dollar again. If I'm bullish on Euro USD, I need to be bullish on pound US dollar. It doesn't correlate exactly like the dollar index does, but it does, ultimately move in the same direction. Okay. Now you can see off of the last down close candle on the H1, right? I have my 50% of my institutional candle. All right. Price did not come all the way down into it. It actually missed it by 5 pips, okay? You were looking at H4, yeah. So, and that's ultimately what it did. It did come into the H4. What Gary's talking about is this candle right here, all right? And you can see we did get a, right? We did get a 50%, okay, rejection, and it's getting a nice engulfing. The only reason I didn't do the H4 is because the stop loss would have had to have been just a little bit bigger, right? It is what it is, no big deal. Oh, further down, you're talking about way down here? way down here?
Yeah, that's what I was looking at for possible entry if it comes down to there, Mike.
Okay. Yeah. I mean, ideally, yeah, that needs to get mitigated out of. Me personally, I didn't see us getting down there today. Maybe, after FOMC, but I don't see, I don't see a reason for the dollar index to allow it to get way down here. Now, when we were up here, that gave us a great reason to get down here. I don't see it. Maybe tomorrow morning, if we do come up to these highs and then come back down, possibly. But yeah, I mean, I've got it marked off. You can see I've got my H4 institutional candle. I've got my stop loss set here. This is an area of focus for me. I personally don't see a reason for it to come down that far, just because we've been supportive, ultimately for an entire day. This area has, for 18 hours, we've been supportive by this area here, and everything now has been mitigated out of, right? So that's the only reason I don't think it's going to come down. And ultimately that's what happened. You can see on the 15-minute time frame, we do have imbalance, right? So you can see this candle here created some displacement. So from this wick to this wick, and actually it's a little lower now, right? Because we can go down, because price is now mitigated down a little further, all right? And I showed you guys this little trick. If you go to 300, it goes right to where price is at currently. So you can see we've mitigated some of that candle out. It is what it is. If it does, this would, man, yeah, this has moved away, and you could see we had a really good reaction at that London closure. Price moved 30 pips, right? 30 pips. We're starting to get another reaction away from it. Let me see what Euro USD is doing. Yeah, same thing. We're getting a nice reaction. All right, so I was kind of hoping these were going to happen during the London session. It is what it is. You're looking about these equal lows right here?
No, sorry, Mike. Just where it's moved away from there.
Right here.
Like a sort of
Yeah, absolutely. Yeah. This right here gives me some really good. Remember, for me, I always ask the first question is, where's the money? Well, the money is sitting right here. Okay, so that's why if I'm in this trade right now and we've moved away, like 20 pips, I would be at break even just to protect my trade. And I would be getting ready, potentially for a deeper retracement, or just get some reason, for me to get into the trade. Now, if we do break above this high, same thing on Euro USD. If we break above this high, okay, I'm pretty confident that we are going to go higher, but we can most definitely just go sideways, right? We can come up here, play ping pong, come down, play up here, ultimately run that liquidity, and then ultimately, come up and take out these highs. But I getting that entry is obviously the first, and foremost thing that I want to do, and then just protect it. There's not much you can do after that. So just keep, I guess, GU on your radar. If I'll tell you right now, I'm not in this trade. I'm not looking to get into this trade right now. I'm gonna try and wake up. I say this now, but I'm gonna try and wake up around 5:30 in the morning. I've been saying I'm gonna get up early for the past 2 weeks, and today was the earliest I got up. I got up at 7:30. So if tomorrow, if I get up and we are close to running these lows, I may look to get an entry off of here, that deeper retracement, or I may just set up down here where Gary was talking about, right, off this H4. And you can actually see there may be, well, I'll look for the price action, but there may be a way to tighten up the stop loss. Because right now, if you're playing off this H4, my stop loss would be 20 pips, right? 20 pips on GU, okay? But that's ultimately where I'd be looking at, all right? The next thing I was looking at was CAD JPY, right? again, what I'm looking at is on the 4-hour time frame, right? Where's the money, right? Equal highs up here, right? We have some equal highs. Okay, equal highs. We also have nice equal lows. And I was actually kind of, when I charted this up this morning, we were here. And I was kind of hoping that we were going to get a liquidity grab, right? Take all of these buyers out of the market. We were going to come into 50% of this down candle, which lines up right here, okay? And that's kind of what I was looking at. I wanted to see us get into there right on this green line. Stops just below the low is a 21 pip stop loss off the 4-hour candle. And listen, for an H4 candle to have a 20 pip stop loss or a 20 on GU, that's not bad. All right, that's not bad because you're playing off the bigger time frame. So this to me is still worthy because it's not that far. It's ultimately 55 pips, right? 55 pips. And one of the key catalysts that would get us going there is oil, okay? And I don't know if you guys saw any of the charts I posted on oil, okay? First and foremost, I said, didn't I not say oil to 11 bucks, right? I said oil was coming back to $11, and there it went to 10.14 on the futures contracts, right? Ultimately, I was just targeting these lows right here, right? These equal lows. I did finagle an entry yesterday, but I got out way too soon. I was into an entry. I think I was off the 15 minutes. Yeah, it was right here. I got in off of this candle right here, right? This last up, 50% came in right here. My stop loss was just above the wick, and I took it to right here. I was planning on swinging it all the way down, and had I, it would have been a nice, relatively, if I would have taken it to even these lows right here, that's almost 11 to 1 ROI. But anyway, so oil has ultimately kind of done what I was expecting it to do. You can see we do have some nice equal lows here, right? Some nice equal lows here. So if oil, and I don't even know the catalyst for oil to do this, but I know the White House is talking about doing something to bail out the oil companies. So if we can get an appreciation on oil, right, make a run on these lows, take the liquidity out of here and here, all right, and then ultimately do this, okay? Yep, no, you're good. We're just kind of doing a review of stuff. If we can do that, okay, then that would give us the catalyst for this, okay? CAD JPY down with an oil dropping to take out the lows. We can take out these lows. We can mitigate into this 4-hour candle, and then we can come up here and take out these highs, right, where the money's at. All right, that's the play I'm looking at. All right, that's what I'm looking for. It's nothing crazy. And again, it's off of this H4 candle, and you can see, right, it's a nice 5.5 to 1 ROI, right? Risking 21 pips off this H4 again is not bad. So that's personally what I'm looking at on CJ here. I'm going to screenshot this, send it to you guys. All right. And it's pretty dependent on what oil does. Ultimately, that's how I'm playing it. I was looking at NU, but it's now invalidated for me, right? So, and the reason I was looking at NU, especially when you guys see me post this in the chats, all right, we had an area of equal highs, okay? We had an area of equal highs, and you can see this nice 4-hour bearish down candle. I wanted us to come back into mitigate out of it and then take it up. And it was going to be a relatively shorter trade, right? I was looking at something like this. Not a huge ROI, but I just wanted to take it to the equal highs, okay? A nice almost 3 to 1 ROI, but those highs have been run. So for me, this invalidates the trade setup for me. I'm not looking to do anything with it just because there's no relatively targets for me, okay? You can see NU is literally sideways, and I'm not looking to trade a consolidated range, okay? Now, if NU does come, and you should be able to see this nice 4-hour candle right here, you know, you can see where's the liquidity, right? Equal lows, equal lows. We grabbed liquidity and we took off. So ultimately, we will need to mitigate out of this position, okay? This would be an area, and I've got an alert set here, okay? This would be an area that I would look to highlight, all right? Here's a cool little thing I'll show you guys. So, and I've only kind of like started to show this more because I have a lot of more people I'm doing Zoom calls with to show them trading view. So if you come here to the eraser, and on a Mac, it's the command button, but if you just highlight, right? Highlight all of this and then hit delete, it'll delete anything you want to, you know, delete off of drawing, okay? So anyway, that's kind of what I was looking at, all right? Let's look at it. You got GCAD? I got something on GCAD as well, bro. Let's see. My GCAD's way up though. It's nowhere close. Hold on. Let's see if that opens it up. Okay, so you are looking for a buy on GCAD. Okay. All right, let's take a look. Oh, here's GCAD right here. Yeah, see, I was actually looking for a sell. I'm actually, because I'm bearish on GCAD. Let's take a look at yours real quick. Hold on. Let's see. All right, so you're on the 3-hour. All right, you're on the 3-hour. All right, so hold on. Let's take a look at this, right? And you're just targeting these highs? Okay. Well, I mean, it does play. It does play to my bias because I'm looking for these highs to get run and to come back into this last up candle, right? That's what I'm personally looking at. So Gary, I mean, that does play out. I just know on the higher time frame, GCAD is bearish, right? It's bearish. So you're counter trend trading it, where my setup is with the trend, right? It's with the trend. But ultimately on GCAD, what I'm personally looking at, right? Where's the money? Got equal lows, right? You got equal highs up here. I'm looking for potentially that London, 3 a.m. London time for the markets to return into this H4 candle, right? This last up candle, okay? Stops are above that wick. And then my targets, right? My targets are going to be these equal lows and these equal lows. And then I've got my eye on this candle right here where I want to see a reaction off of. But this would be a pretty decent move. On a so off of a 4-hour candle, and this is a pound pair, right? Off a 4-hour candle, that's 30 pips. We can get down into a 15-minute that I've got highlighted to get a tighter stop. But just to these equal lows, right? Just to these equal lows, you're already at an 8.5 to 1 ROI off of a 30 pip stop loss. Okay. So ultimately that's what I'm looking for to return into this candle right here. I've got my alert set, but it's a ways away. Realistically, it's like 200 pips away. So this may be something end of the week. It's exactly 207 pips. And where yours might play out better, it's a counter trend move. How it's bearish? Yeah, sure. So on a weekly, right? On a weekly. You know what? Let me hide all this. It's easier to see this way, right? Okay. So on a weekly, we are, where's the previous high? Let's see. All right, well, on a weekly, it's sideways. On a weekly, it's sideways because you would have a new high, right? Low, high, but then we broke below the low, right? So it was bearish here. I mean, technically, there's no candle closures above this high, right? But there's wicks. So on the weekly, it's sideways, all right? But if we go to the daily, all right, if we go to the daily, you can see that structure-wise, right? Come on, come here. Structure-wise, we have broken below all of these lows, right? We've broken below, and we have not taken this high, okay? And then we have not taken this high. So one of two things needs to happen, right? So for us to be bullish, right? For us to be bullish, we need to break and close above the previous high, right? We need to come up here for it to be bullish. The fact that we have not broken above, okay, means that we're still in a bearish trend. Does that kind of make sense, Gary?
Yeah, that's fine, Mike. Sorry, I thought because it was a body closure above the previous body closure high, you know where the wick is? You said the wick's higher. But I thought because the body closure's been higher on the next high,
Yeah.
that meant it was bullish.
No,
You
I
know what
mean, yeah, no. We still need I mean, just because the candle closes, because if you go to a 4 hour, like let's just look at a 4 hour, right? So on the 4 hour, right, all it is just equal highs, you know, but we haven't broken above it, right? So if we haven't broken above it, all we, you know, realistically what this is just a long continuation of a retracement, you know? So like if I come here, okay, you can see from this high to this low, this was the pullback into the 78.6, and we've just been consolidating on the 4 hour, right? You know, ultimately it needs to break below this low to continue the trend, and then obviously another retracement. But because of this move right here that broke below all these lows, this is what put us in a bearish trend.
Okay, yeah, that makes sense. Thank you.
Yeah. A gold cup alert just went out for GCAD. Okay, let's take a look. Let's have a gander. What gold cup alert was it? Was it? Let's see. Oh, the only thing I see is for gold. Oh. You're talking about, let's see. No, that's for gold. Yeah, I don't see anything for a GCAD. No. I don't see
I got
anything.
it for gold, not GCAD.
Yeah. Okay. So on GCAD, yeah. This is what I'm personally looking at, right? Here, Jenna, I'll get yours here. Yours on gold. Okay. Yeah. I'm actually looking at the same. Oh, is it 86? Yeah, I'm looking at the same area. I actually got my pending orders already in for it because I'm willing to risk it. But you know, everyone should be able to see my thought process on the 4 hour time frame, right? This is what I'm looking at. Targeting here, this would be, come on, there we go. So this would be TP1, right, for me here. And then ultimately, this would be TP2, depending on how quickly we get down there, right? You know, I mean, this may realistically be a trade for next week. Who knows? You know, I mean, we could just keep consolidating here. But this is what I'm looking at for GCAD. All right, and then I'll show you the 15 minutes. So on the 15, We'll get all the way up in here. Right, so on the 15, I'm not gonna waste time getting into this, but this is pretty evenly traded. There's no inefficiency up here. But on the 15, we do have this candle right here, right? This candle right here. And you can see stop loss, I'm sorry, the entry right around 75 and 95. And my stop loss, we can shrink down relatively 10 pips, right? We can shrink this down by 10 pips. Just because everything else has been evenly traded. Off the 4 hour, I would have to go to the top of the body of that 4 hour, just because that's how I trade off the 4 hour. But on this 15, I would go to the top of this wick. All right, but you know, as we get closer, that's when I would get down into actually looking at it. All right. AU, the only thing I have on AU, right? Oh, it's right in here. Okay, so I am looking. Let's see. S&P. All right, and then yeah, I'm looking at sells on S&P too. S&P and Dow. I'm not going to trade the Nasdaq because the Nasdaq is doing some hunky stuff. So we'll get to it here. All right, so I'm looking, here it is right here. So I was charting this up right before the call. Oh, hold on, I gotta move my stop loss. So let me move this sucker. Here's a 2.5, I'll go to 2.6. All right, sounds good. All right, so that's protected. It can do whatever it wants now. Sounds good. I'm near sure Zach was talking about that same sort of area on AU. For today, I didn't get to. Today's Taco Tuesday. I didn't get to watch his show. Yeah, same area. Okay. Yeah, I mean, realistically, it's just the last down candle that I'm looking at. It comes right here on the 15-minute, and the only thing that I really want to see. All right, hold on. Give me a sec here. Let me move this sucker. All right, so this is the next area I want to see. All right. And this is, just so you guys can see, this is kind of how I just manage my trade. I'm at break even. This area right here is potentially an area where I would start to take some profits, right? Because at that point, I am 23 pips in profit, so I would be at just over a 1-to-1 ROI. So I might take maybe like 10% off, okay? All right, so on AU, delete this, right? You know, where's the money, right? So you can see we have some equal lows here. We have some equal lows here, okay? And we have some displacement, right? So on the 1 hour time frame, here it is right here. So on the H1, right, you can see from this wick right here to that wick, we have this area of inefficient trading. This is all just buyers in the market, okay? We don't have any sellers that were given the opportunity in this time frame, okay? So the market does need a return back to that area, all right? Now, you can see this candle is relatively small on the 1 hour. On the 15, it's not a huge candle. The difference between 50% and the open is literally 1.5 pips, okay? So where I would personally look to take an entry is right at the open of it, okay? I'd be looking for something like this, okay? Right at the open of this candle, my stop loss, you know, you don't need to have a stop loss below this wick, right? Price should not go below that wick. So if that wick's at 8.5, You know, AU on my broker is normally like a pip and a half spread, so I'll just round it to 10, right? So that's what I'm looking at. And then my targets. Now, one of the things I'm personally looking at, right? I've had this marked up for a while, that weekly candle. 50% of that weekly comes in right about here. So that's where I'm looking to see if this market gets up to. All right. Now we do have. Looking for some inefficiency. So this is that daily's done. So ultimately, that weekly is probably where I'd like to take it to, right? That weekly is 114 pips, right? Risking 10. So this would be a fantastic ROI. This is something that I would honestly throw a 1% risk on. You know, I'll lose the 1%, no big deal. But the ability to make 11.5% on this trade is something I would look at. So this is ultimately what I would like to see play out. And my target would be this 50% of the weekly. You know, if you want it, the 50% 65.71. So if you just want to be safe and take it to like 65.60, I mean, you're still looking at almost 10.5. And why and when would you set that order up? What do you mean, like when? Like, am I going to put a buy limit in for it right now? Yeah, absolutely. As soon as I'm done with this call, I'm going to go in here and set my order limits, you know? Yeah, you know, actually here, before I forget, I'll just do a quick one. So, you know, like if you want to set an alert, you know, maybe somewhere in that, right. And then, yeah, I mean, here, I'll just set one real quick. We'll do a limit order. So 64.56, I got a 1.5 pips. So we'll just say 58. 64.58. No, yeah, 64.58. Stop loss 46. So I'm gonna go 44, 1% risk, and then 65,600. There you go. All right, sounds good. Yep, I'll send it to you guys right now. Here is, and again, it's off of the 15 minute. Here, let me go to the 15 minute. It looks complicated on the computer. It's actually pretty cool because I don't even have to guess. You know what I mean? Like I just put 1% in. It tells me everything. You know. All right, so it's this candle right here. This is what I'm looking at. Yeah, you know, I was trying them out. I actually like them. I went with Forex.com just because it's a U.S. broker, and I only trade Forex with them. I only trade Forex. I have my FX Choice account that just because the commission rates and stuff, FX Choice doesn't. I have a pro account. I don't get charged for trading the indices on commission. It's just the spread and that's it. And Forex.com, I'm on a commission-free account as well, so I don't pay commission. It's embedded in the spread. So some pairs are like I don't trade. Like Euro NZD is like 9 pips, so I don't trade Euro NZD. But Euro USD is sometimes less than a pip. You just saw AU was a pip and a half. So I just got tired of paying for these ridiculous commission fees. You know, you'd be amazed how much I had to pay this past year in commissions. You know, free money, whether I won or lost, my broker got all that money. So I'm kind of done with that. So that's why I'm looking at AU. I'm going to get to the indices in a second here. So Euro, man, son of a gun, bro. Euro, this son of a gun. It is what it is, you know. We had a great entry up here last week on Euro Odd. I was looking to target some low. I was looking to target this daily imbalance, but that's since gone. So I am done with Euro Odd. But I was looking to target. You know, I wanted to see price mitigate back into this candle here, and it's obviously not going to do it. So I'm not even looking at euro AUD right now. And actually, let me change that to, okay. The other that I'm looking at, we went over GCAD. EuroCAD is another one I was looking at. Now EuroCAD, this would still play out, and you can see I've been trying to get an entry, right? I've been trying to get an entry on this stupid pair. The only thing that's going to invalidate this trade setup for me is if we break below these lows. Okay, if we break below these lows, I'm not taking the trade. Okay, but what I do want to see, okay, what I do want to see is us return to 50% of this H4. Well, right. So here's the problem, though, and it's not a it's not an accumulation, right? If we break below here, we're going bullish. Okay, so I'm not looking to. There's no point in me selling this, Gary. You're on the right track. This is accumulation. So if we do take these lows, we're going up, right? So I'm not. Yeah, absolutely. Yep, absolutely. And for anyone who's confused, so if you're looking at Wyckoff schematics, right? Let me pull up a Wyckoff schematic here. And it is right on. I mean, it's awesome that you saw that, Gary, because that's honestly what you just got to train your eye to see that stuff. Here we go. Let me pull it up. All right, here it is. So here is a Wyckoff schematic, right? And ultimately, let me pull this down like this. Okay, so right now we're looking at this accumulation phase, right? We've kind of seen this, the selling climax, right? We've seen a little bit of a spring. We have a low volume. I want to see I want to see that spring and then the test. I want to see these lows taken. But if we can get one more push up into here, right? One more push into here before these lows are taken, that would take us to our lows. And then that would set us up perfectly to catch the next move, whether it's the spring up and catch the pullback to take it up into the distribution phase, all right? Which will give us probably a good week and a half of great trades. Okay, but that's ultimately what I'm looking at on the 4 hour. Okay, I am looking for us to return into this candle. Okay, you can see on the 1 hour time frame, we have a nice area of equal highs. We have a 1 hour displacement inefficiency or imbalance. Okay, which that imbalance, if it mitigates completely, goes into 50% of our H4. And if you want to split the trades, right? If you want to split and twin trade this, right? Just split your risk. I did find on the 5 minute, I think it was. So on the 5 minute, we do have a little bit of imbalance here, and the candle to play off of is right in here. So if you wanted to get, potentially just take an entry off of like 52.63, you would really only need an 8 pip stop loss, okay? Because there's no if price comes above here, there's no reason for it to come back down. It's just going to keep going, all right? So look at the 5 minute. When would you twin trade and put a second position off the H1 imbalance? Hold on, Matt. I'll take a look. So, if you want to twin trade it, absolutely. Twin trade off the 5 minute. That'll give you a really, really nice ROI. Okay. But yeah, just look at the 5 minute. I've marked it on my charts so you can see it. And again, stop loss would be right here at 52.71. So I've got my alert here. I'm personally not going to set an alert on this one, because if during London session we take the liquidity and then come up, I don't want to get stuck in a losing trade. Okay, so that's ideally what I am looking for. Could delete these, and you can see, off the H4, right? This last H4, this is where that entry was. That was a beautiful entry on EuroCAD. All right, so I'll send this out. This is what I'm looking at. And again, it's very important. It's only if these lows are intact, okay? What do you mean crunching entries to 80%? Yeah, so this would be almost a 5.5 to 1. And if you take it off that 5 minute, that thing gets even ridiculous. So off the 5 minute, just be mindful of your spread. I mean, that'd be a 15 to 1 and then a 5 to 1. So you're looking at probably 20% if you twin trade this, 2% risk. All right, so I will send this out like this. How can you take entry from 50? Oh, okay, so you're talking about my 50, 80% entries. Those are my scalping. That's what I use for scalping, like scalping the US 30 or scalping S&P. And that's only on an impulse candle. I'll show that. I got gold to do, and then I'll do the indices. All right, and I'll go over that again. So we have gold, right? And what I am personally looking at for gold, all right, I did take a small. Or actually, I was trying to take a small position here, but I missed it by my spread. It was like half a pip. But you can see these equal highs, all right? You can see these equal highs. And you can see this very nice, right? This very nice down candle, all right? Everything's been mitigated out of this candle except for this area right here, okay? So going to, I think it was a 45 minute. Yeah. So on the 45 minute, this was the last point right here of imbalance and displacement that I found. You can see the H1 imbalance is here. And then this is the last down candle that needs to get mitigated out of, all right? You can see that price came down, moved away, but never came back and didn't actually even come back to the open of it. So where I'm looking to target, right, where I am looking to target is I'm gonna take an entry at the open of the candle, 50% of that candle, right? 50% comes in at 1683.32, and I'm looking at taking a 1684.81. So I mean, it's a very small amount. I just don't want to miss this move. I'm willing to give up, the extra pips in a stop loss because I'm planning on taking this higher. What I'm personally looking at targeting is is the highs, right? I'm looking at targeting these highs up here. Okay. So this is what I'm looking at. It's about a 15 to 1 ROI. All right. Does it seem accurate? Hold on, let's see. All right, Mike, have it going, bro. Boom, boom, boom. Let's see. Yep. Yeah. Absolutely. Yep. I'm only personally though, because I'm probably going to be asleep when this happens. I'm only going to do one order. I'm going to do it off the top. There's really, for me, there's no reason for me to twin trade it. It's the difference, I think, of going 14.5% and then 15.75%. So I would rather just do 1% risk while I sleep. If I get stopped out, I get stopped out. I lose 1%, no big deal. And if I wake up in the morning and I'm close to 15% richer, I'm happier. But this is the area that I want to target. This is that last down area. Yeah, I'm personally going from the open, right? I'm taking it off that open, which is at 1684. Where is it? Yeah, I'm taking it off the open. Yeah, you can see the green line. I'm taking it off the open right there. All right, that's where I'm taking it off of. And then my stop loss is just below the bottom of the wick. All right, so just pay attention to the spread. Here, I'll send this out as well. And you can see I labeled it open of the 45-minute institutional candle. This is what I'm looking at. Yep, I'm going to do the S&P and the Dow right now. Okay, let's get to equities. All right. Oh, real quick. So one last thing before we get off gold. So the 10-year Treasury yield. All right. This is one of the things I like to look at as far as a catalyst for getting gold higher. And you can see that we are moving higher and higher on the 10-year Treasury note. On a daily time frame, you can see that we are ultimately almost ready to break all-time highs, right? So, and you can see the monthly, we've just expanded, we've taken out these highs. So, you know, I'm bullish on gold, not only because of it's on the higher time frame analysis, but I'm also bullish on it because of the 10-year Treasury note that's also gaining a significant amount of momentum, all right? All right, so with the indices, right, we had some major divergence, right? The first thing I like to look at is the volatility index. All right, you can see that we are ultimately trading below 33 on the volatility index, you know, which is a great sign. If we can get back down into like the 20 to 25 range, that would really give a lot of momentum to bullish structure on the indices. But we're still in that relatively higher threshold. It is showing some downward momentum. So that's the only concern I have, is that the volatility index is decreasing. But I'm still willing to give a decent setup on it, right? I'm still willing to wager. All right, so gold, you got, that's S&P. That's actually, we talked about gold. All right. Yeah, I'm personally not looking to buy it. I do have an area that I was looking to buy. So let's dive into this, right? So on a daily time frame, right? Daily time frame. Ultimately, you can see that from our high, and this is the S&P, right? From our high to our low, okay? It looks like we're right at, whatchamacallit, 61. Yeah, we are right at the 61.8 retracement. So on a daily time frame, I mean, we obviously, it's a no-brainer. We've broken structure. We are still in a bearish market on the daily. When we get to the 4-hour, the fact that we broke below these lows, but then made a new high, okay, kind of tells me that it really doesn't know what the heck it wants to do, all right? It also tells me that there's a lot of manipulation going on with it. Now, we did close, right? If you look at the daily closure, we did close today, right, on this big doji candle. And that still doesn't give me a lot of confirmations that we are going to continue to sell off, right? Doesn't give me a lot of confidence that, all right, this is the reversal. You know, much like this. Oh, look, we closed on a doji, and what happened? We just plowed right through it. But now on a 4-hour, we did engulf, right? So this potentially, right? This on the daily time frame, and I'm never going to trade it off the daily, but this could be our daily institutional candle, okay? That would be our daily institutional candle, especially since we did close very bearish, you know, on the 4 hours. Now, one of the things I'm looking at, okay, what time frame are you on? You were on the 2-hour. Okay, yeah, no, I'm not looking that high. I'm not looking that high. I'm looking at this structure right here, okay? Couple of things I'm personally looking at, right? This area right here, this candle, is an area I'm focusing in on the 1 hour. Yeah. Yeah, I personally think, now you can see the first question is this, right? Where's the money? All right. So if these lows stay intact, right? We know where the money's at, okay? And this is the scenario that I'm looking to play out, okay? Delete this, we don't need that. Hold on. Let me delete this in here as well. Okay, we'll clean this jazz up. All right, so where's the money? We've got plenty of liquidity sitting here, liquidity sitting here. So I would like to see us tonight trade back into here, okay? Now, I am eyeing a couple of things. Let me set up this. So on the 1 hour time frame, all right, so 50% of the H1 institutional candle, right? And then we're going to make that the high. All right, bro, have a good one, man. Okay, so that's our high. All right. So we have an option coming up into this. What do I have? I have a, nope, 30 minutes, not it. Let's go to the 15. Now, real quick, so on the 1 hour, right? On the 1 hour, you can see we do have some displacement, right? So this imbalance on the H1, and the three things I look for an entry, right? Where's the money? Do we have displacement? And what was the last institutional move, right? Where do they need to hedge out of that position, okay? So if this ultimately, and this tells me, right? This tells me that the market wanted to sell off. So before they could sell off, they needed to run up and take out highs. So were there any highs in this area, right? And you can see just by going here, yeah, just by going here, okay, right? Where was the money, right? Where was the money? So we had money here, we have money here, okay? These were selling areas for retail and for some of the bigger firms, okay? So institutions needed to come here and run out the liquidity. So they ran the liquidity, right? Here was the liquidity grab, all right? And now this was that last push to buy so that they can turn around and sell. So they need to return to this area up here in order to continue down. That needs to happen, all right? So we have this 50% on the H1 that's in play. And what I'm looking for is I'm looking for an engulfing candle with that institutional candle next to it. So you can see like this, I'm not looking to play off anything like that. I'm looking for a candle with some substance. You can see here, this really doesn't engulf, right? It's not an engulfing candle, it's the next one. So I'm not gonna play off of that. So the 15-minute, I still have nothing. All right, we get into a 5-minute, and here are some areas of focus that I'm looking at, right? So do we have anything up higher? Well, this candle here, the 9:30 open, took all of the liquidity out, right? So if there was any, not liquidity, but any of the buy orders are now mitigated by this candle, right? So I don't even have to look any further, all right? I know off the 5-minute, this was the last up, this got mitigated out of, all right, by this candle right here. If I go to a 3-minute, you know what, let's just do it like this. This might be easier. So on a 3-minute, right, here was the institutional candle. You see how it engulfed, right? Engulfed right afterwards. So if I put a 50%, do you see how we're talking the difference of maybe a point, right? So this candle came to 29.19.5, 29.19.7. So we're talking 0.2 of a point. So this candle ultimately, and these three candles mitigated out of that buy position. Yeah, so all of this has been mitigated out. This area here, these candles mitigated out. So our next play would be right here, right? This would be our next play. So on the 1 minute, right, if we line this up, okay, remember, there's a reason why. So we highlight this open and this close. This was the last up candle, right? Last up candle. There's a reason that 930 candle came in here. That would have been the, I was looking at the Dow, I wasn't looking at the S&P, but that would have been the play, played off the 50. Stop loss is just above the top of the wicks. So you're risking, you're risking a minutia of, what's up, Bubble? You're risking hardly anything, and you could see what the ROI would have been to target the lows. If you were going to hold this to these lows down here, that's a 14-to-1 ROI. By playing it off that 930 open, it was a 14-to-1. All right, so this all has been out. So the next thing we need to work out is what's in this area here that we need to mitigate out of, right? There's got to be something in here that needs to be mitigated out of. So on the 1 minute, right, this potentially could be, because remember, there's a little bit of slippage. Every broker is different. So this may have been an engulfing. So I'm just going to mark it up from open to close, right? And you can see 50%. Maybe I meant 50% of the H1, or we'll see. All right. So this is 50% of the 1 minute. Is there an H1 in there? Oh, I'll be. Look at that. All right. So the 1 minute and the 1 hour are the same. Are the same price point. So that's potentially a good area of confluence that I'm looking at, right? Do you understand that? So this 1 minute candle and the 1 hour candle have the same 50% mark. So that is potentially something that I would be looking at, and we can move our stop, right? We can move our stop now to this right here. Okay. Now, the issue is, did this candle mitigate out of this position? Because technically this did come up. Now it didn't go all the way to 50%, but it did go into the body of that candle, right? It missed it by 16. So it missed it by 0.5 of a point, right? Missed it by 0.5 of a point, but it still did go into the body of this up candle. All right. So this would be an area, this would be my second favorite entry. My stop would still be up here. But now we need to look to see if there's anything in this area right here, right? Is there anything in this area right here where we need to mitigate out of? So on the 1 minute, there is no candle there, right? But now on the 2 minute, we do, right? You can see the last up, we have an engulfing, right? You can see how it's a perfect candle to play off of. And what happened, right? This candle here mitigated out of this position here, right? This mitigated out of here. So this now has no bearing for me. So this now becomes not even a second, position for me. This is now a third position. I'm looking for a better position. So now we got to look into this candle here, because this is that last up candle. All right. You can see. All right. Have a good one, man. So I need to work into this candle. This is the candle I want to work off of. So let's go and, okay. So this is the candle I need to work off of, or this candle, because this actually went a little higher. So let's go to the 1 minute. I can move the stop even lower. All right, sounds good. Have a good one. All right, so we've mitigated out stops. Stop loss doesn't have to be higher than that, okay? Let's measure this. So on the 1 minute, that's the 1 minute, all right? So on the 1 minute, let's see what the 2 minute looks like. 2 minute is a little bigger of a candle, but I like the bigger candle, right? So there's the 50% of the 2 minute, right? This is the last up candle, stops just above that wick, okay? You can see we have a little bit of displacement or imbalance right here between these 2 points, right? These 2 points, and that's on the 2 minute. Let's go to the 3 minute. So you can see the 3 minute is a bigger candle. So I would actually like to play the 3 minute, okay? All right, you can see the 50% of this 5 minute is here, right? But I personally like the 3 minute better. I like that 3 minute simply because I don't want to miss the trade by 1 point, right? I don't want to miss this trade by 1 point. So you have the 5 minute, you have the 3 minute that sits right up there. Nothing there. Why do you look for an engulfing candle on the top for a sell, but not the bottom when you're looking for a buy? Okay, I don't understand that question. Why do I look for an engulfing candle on the top for a sell, but not on the bottom? You mean engulfing to buy it up?
Yes, can you hear me?
Yep. Yeah. I do. If it engulfs on the on the candle going up, I'm looking for on the last down candle. If it engulfs up, that's what I'm looking for.
Okay. Well, sometimes it seems like you're always looking for an engulfing at the top, but then on the bottoms, it's not. It doesn't seem like it's always an engulfing.
Yep.
So I'm just
Yeah, I do. I just if like on Euro USD, right? Because that's the one that was an easy one. So I looked. What was it? H1. Yeah. So you see the H1. Here's the engulfing. So that's why I played off the H1, not the like the 45 minute has the engulfing, but you could see the next candle went into the body of it. So technically on the 45 minute, this has been mitigated out of. On the 30 minute, right, you could see I'm not going to play this small candle. I would rather play the 1 minute, Does that kind of describe it better? Yay or nay?
about as clear as mud still.
It's okay. So I'm looking for in it. So would you say that this candle right here is not an institutional candle for me to play off of, right? This small little candle, even though there's an engulfing. Okay.
Right. I wouldn't think so.
Yeah, I'm looking for a candle that has some selling power, right? That has some selling. Hold on, where are we? I'm looking for a candle that has some selling power in it, and then immediately shows evidence of buying afterwards, right? That's what I'm looking for. Could I have played off of this? Absolutely, I could have played off of it, but I'm looking, I have to balance two things, right? I have to balance how to crunch my stop loss so I can get a better ROI, and I have to balance making sure I get in the trade, right? So that's why I played off of this H1, because this H1 gave us, it's the candle that ultimately gave us the sell to buy, right? Immediately dropped in, grabbed the liquidity. This candle, not the candle before it, this candle is the one that grabbed the liquidity. And then buyers came in and immediately gave that reaction I was looking for. So that's why I was going to play off of this candle right here.
Okay.
Does that kind of answer it?
Yes.
Okay.
So even though you still had engulfing and smaller candles going downward into even probably the 1 minute.
Sure. Yeah, absolutely. Could the 30 minute, right? Could I have played off of this 30 minute right here? I could have. Yeah, I could have, right? But the 30 minute, these two candles are the one that grabbed the liquidity, okay? So I would rather play off the one because the one gave me a better, it looked better, right? It gave me everything I wanted. It gave me the institutional move. It gave me the liquidity grab, right? And then it gave me the very next engulfing candle that showed evidence of buyers coming into the market.
Okay.
All right. Okay, so let's go back. Look at Euro USD, man. Son of a, I'm glad I took that one position. All right. All right, so let's get back to S&P. All right. So where? All right. So what I am looking for, right? What I am personally looking for, I was looking in this area here. I'm not even fondly looking at it now, right? The key areas I am personally looking for, all right, are off of the, the 3 minute. I do like this 3 minute candle, right? And I like the 5 minute candle, okay? So it's this area that I'm personally looking at, okay? That I'd be looking to take a sell from with a stop loss just above these, because everything else here has been mitigated out of, right? Everything else here has been mitigated out of, all right? Yep. Yeah, I mean, it's doing its thing. It's probably going to come right up here to mitigate out of this position here. Yeah, but so the question is, why don't I want to buy it up, Bonnie? I mean, you could, but where's the setup, right? Where's the setup? For me, the setup to buy it would have been right here, right? That's where I'd want to buy it from. I'm just not going to, I'm just not going to buy and try to yeah. I'm for me, I'm all about equity preservation and catching the right move, right? I don't feel like being in a trade for 8 hours on S&P 500. I would rather be in a trade for 15 minutes and be done with it and catch 10%. Whether that 10%, so for me, I could care less about the amount of points I catch. If I'm risking 1 point and I catch 10 points, I just made it 10 to 1 and I'm great. I'm done. I'm not trading on futures contracts where I'm trading contracts. I'm trading lot sizes. So I can really crunch in and not have to worry about how many positions I take or, have to worry about closing one position out at a certain time, So for me, I'm not looking to buy this up, especially not at this time of night. If potentially, if we consolidated, I'll tell you right now. So if we consolidated here, right, and didn't come into this area tonight, if tomorrow morning we were down here, I would look for price to dip down into this area right here. Let me throw this out here just so it is there. And then I would potentially take a buy down here, because this would be the liquidity grab. I would take it here to come back up to mitigate out of these positions. Okay, that's ultimately what I would take. But these are the key areas I'm looking at, right? And I've labeled them, 50% of the 3 minute, 5 minute, 3 minute. I'm not even looking or care about this 1 hour up here, just because everything's been mitigated out of. Okay, so if I were going to set a position tonight before I go to bed, it would be off of this top one, just because it would be the lower risk. So risking that, and actually I'd go off the 5 minute just to make sure, because if I'm sleeping, I don't want to miss it, risking 3.5 points, and then I would take it right back down to these lows. Okay. So, I mean, that's a 1401 ROI. That's how I would look at it to take. And I'm targeting this area right here, this last up.
Hey, Mike, can I ask you a question?
Yep.
So let's say this was a hypothetical morning entry. So let's say you woke up 6, 7 o'clock in the morning, and you saw price up there. How do you go about like pre-open entries? Like, what's your thought process around that? Because
it's got to be, so everything I've been just been tracking and looking at, if I'm not in trade in one of these by 8:30, I'm not going to take it. I'll wait till that 9:30 open and going into the 9:30 bell. So like if this was 9 o'clock right here, If this was 9 o'clock, I'd be giddy because I would be, or like 8:30, I would be looking for that spike up, right? Just like just like this stupid candle did here, but it didn't do on the Dow, because I was watching the Dow and I was looking for that. And I'll show you the Dow next, but the Dow didn't do that. The S&P did. But I would be looking, and I would be ready to take an entry right at 9:30 if price spiked up in here, because it would accomplish two things. We would take out liquidity. We would mitigate out of the last position that was an institutional move, and then our targets are extremely easy. Where's the targets? It's where the money's at.
Yeah. It's just the reason I'm asking is because Nas gave an entry at 8:50 this morning, and I'm looking at it and I'm just dumbfounded because I'm not sure what's going to happen at the open, and I don't want to get wicked out or just randomly, know how they open, right? So
So for me at 8:50 in the morning, I probably wouldn't have taken the entry. Like I said, I like to get into an indice at least an hour before, because I want the hour candle before the 9 o'clock candle opens. I mean, listen, there ain't nothing wrong with sitting on your hands. One thing I've noticed about the indices is you can always find an entry. I mean, it may not be the perfect entry. I got stopped out 3 times at break even today, and then I just said the hell with it and I walked away. I'm not gonna sit there and just keep trying. It was doing this shenanigans, right? It gave really good evidence. I got in right here. This is where I got in. It moved up. I went ahead and moved to break even, and then I think I made some points here. I think I was moving up in profit, and this candle right here took me out. This gave a really nice entry right here. This was a good entry right off of this candle. And then ultimately what happened? We made a new high and then just came right back down to it. So yeah, I'll tell you this, Victor, I don't like to get into entries after 8:30. I do not. I would prefer just to wait for the 9:30 candle and try to snag something at 9:30. All right.
So it would be like what, like between like 7 and 8:30, I guess. I'm just trying to narrow down the time because.
So if you get up earlier, and I haven't been able to do it in so long, but between the 5, 6, and 7 a.m. candles always has a pretty decent move on the Dow and the S&P. But and I guess, and the reason I wasn't getting up early is because we were having 1,000-point swings on the Dow. So I didn't have to get up early because I would just catch 800 points in a morning, But like today, I think we opened, the difference between our open and our close was something like 25 points, So it's we're not getting the volatility that we used to,
Yeah, no, got it. Appreciate it.
Yep. Yeah. I mean, if you want to set the sell limit, go ahead. Don't over leverage. I'm personally, my trading plan says that if I'm going to trade this overnight and I'm going to sleep and I'm not managing it, I'm only putting half of a lot, so half of my risk. So I normally risk 1% per position. I'm only going to risk 0.5%. So for me, if I wake up and we're down here and we end up hitting take profit, instead of 14%, I'm only going to make 7, but that's how I do it. I don't mind. I just want to be able to catch the move, because this may be the only move I get today, so that's what I'm looking at for that. The Dow, let's take a look at the Dow. Yeah, here's the position I took on this stupid Dow, man. Look at that. I was waiting for this candle right here. I wanted to take it off that candle right here. That was my entry. It just didn't want to do it. It just didn't want to do it. So, all right, let me delete this down here real quick. And you can see, ultimately, I had this lined up. I had another buy right here. Let me show you this. I think it was on the 1 minute. Yes, okay. So here you go. This is the 1 minute, right? And this candle right here is the one I was looking to play off of. The only reason I didn't do it was because of the time of day. Okay. All right. So, playing off this candle right here, you can see the 50% line, and that's how close it came on the Dow. to this entry. Yep. Yeah, it frustrated the crap out of me. Yeah, so I was looking to enter around 24,082. You can see it went to 24,085. So it missed it by 3 points, right? 3 points. But so one of the things you got to look at is, so I missed that entry right here, right? I missed, and again, I wasn't looking to do this at 3:54, right? I'm not looking to get into a trade that late. But say this was, you know, I don't know, 5 o'clock in the morning. So we have that low. Now, granted, this is the 1 minute. I don't have the Pro Plus Plus plan where I have the seconds, but I guarantee you this right here was 50% of a 10 or 13 or 10 or 15 second time frame. And that's what happened. This came out to mitigate that last imbalance. All right. So let's take a look at this sucker here. All right, let's go higher time frame. Okay, so on the 4 hour, right? On the 4 hour, let's just look. So on the 4 hour, you can see we are right at 50% of the 4 hour candle, right? We are right at the 4 hour. You can see the difference between the S&P, right? You can see the difference between S&P and look at the difference on the Dow, right? Pretty much identical, right? Almost identical as far as, now this did drop a little bit more. This was a little more of an engulfing where this, you know, was bare bones. But I'm not willing to take an entry right here. I mean, my stop loss would be ridiculous. But on the 4 hour, we are just pulling back to mitigate out of this last up. Let's look at the, all right. So we do have, right? Where's the money? So we did grab liquidity, right? We did grab liquidity. We do have this H1 candle right here, okay? You can see I've got it right here, green H1 candle. So that's going to be my first area of focus. I want to see if we can narrow anything down. You can also see, right, we have some little bit of imbalance, right, in here on the 1 hour, okay? So 3 things that need to happen. It needs to grab liquidity, okay? It needs to mitigate out of here, and it's closing in imbalance. So those are the 3 things that I'm personally looking for a really good trade setup, okay? 50% comes in there. I use FX Choice for US 30. And again, the only reason I use them now is because they don't charge me. I have the Pro account, so I don't get charged ridiculous commission fees on them. Because on a larger lot size, those, you know, you don't think about it, you know, when you're trading like a 0.01 or a 0.02 and it's like 20 cents. But when you're paying, you know, $120 to even enter a trade, it gets ridiculous. Yeah. So Hugo's Way, it's a 0.01 is a 10-cent lot. On FX Choice, it's a penny lot. So for every so like if the Dow goes from 320 to 330, right? That's $1 that you made, if that makes sense. Okay. Yep. Oh, good. Yeah. I figured that was coming up. All right. So 45-minute. I don't see anything worthy of taking, neither on the 30-minute. All right. So let's see. Okay. So here on the 15-minute, we do have this, right? We do have that. Because this candle, remember what I said, how the S&P gave that entry, right? If you look at the 15-minute, see how this candle doesn't mitigate out? But if you come to the S&P, right? The S&P did mitigate out on the 930 candle right here, okay? So the Dow did not, right? The Dow did not. So this would still have to be the play to take, which sucks. 50% of 15-minute. I see. Right, and then stops, right? Stops just above this high. So that's ultimately, and then you can see we have some 15-minute imbalance right here. Yeah, I mean, it's a small candle, but it didn't get mitigated out of, it didn't get mitigated out of. There's a 1 hour. Yeah. I already got it labeled right here, bud. You all right? You've been there, Andrew? Come on. Here's the fifth. There it is right there. I got it. See, you talking about this one? Yeah. That's the first one I have right here. Yeah. So, the two plays to do it, right? I mean, realistically, this is how, if this was coming into session, this is how I would play it, right? I could care less. I mean, there is this 5-minute right in here. I'm not too worried about it though. I would play it like this. I would do one position here, like a half lot position, stop right here. I mean, the stop on the 1 hour is going to be ridiculous. The stop is what, 50? I mean, 55 points ain't bad. I mean, if you're trading Gold Cup, I mean, they're using 300-point stop losses. So that's the 1 hour, right? That's the 1 hour. And theoretically, I mean, where are we taking it back down to? I would personally take it down to these equal lows down here, right? So I would take it to like this area right down in here. I mean, that's a 7.5 to 1. And then my second position, if I wanted to take a second one, would be off that 15-minute. And that one you can really crunch down, right? You can really crunch this sucker down to get down to a 12. You can do a 12 pip or a 12-point stop loss. So I mean, I might just throw another half lot on that for a 38 to 1 return. Look at the 25-minute. Okay, the 25-minute. Goodness, bro, you got all these 20. I got to add a 25-minute, man. Hold on. $25-minute. Okay. Yeah, I mean, that looks good. I mean, look at the. All right, so.
Good night, Dad.
Good night, bud. I love you, man. All right, so, I mean, the risk will still be the same, but yeah, I mean, if you want to play it off that 25, I mean, there's a 25-minute imbalance right there that you can play off of. But this area right here is where I'd be playing the 1 hour or off of the 15 or the 25. Okay. That's where I'd be playing off of. And I mean, the ROI, a 7 to 1 or a 18 to 1 ROI. I mean, this trade hits, you're done. You're done for the day. I would be done for the day. I don't need to do anything else. But these would be my targets right here, right? That would be my targets. Where the money's at. Right in there. Ultimately, can we go lower? Yeah. But there's honestly, if I'm up 18%, I don't need to catch anything else for the day. I'll walk away and just catch another move. But these are the plays I'd be looking at. Oh, look at that. Time to move Euro USD up. Hold on. I'll screenshot this, send this to you guys. Give me a sec. Let me, you know what, active orders. Oh, look at it go. Look at it go. Man. The only order I have right now is on gold pending. So that's not a bad, there it is right there. Here's my profits on it so far. That ain't a bad move right there. All right. So we've broken through this 50% is what I'm looking at. All right. Sounds good. So so now when I'm managing a trade, I'm actually in a trade so you guys can see it. So now what I do is I just come down. So let me look at the 15-minute, right? So what's been mitigated out of, right? So this was the last down candle, okay? right here, this is the last down candle that I'm looking at. So my stops are going to be below that. Let me see the 1 hour real quick. All right, so no down candle. Woo, look at her go. Look at her go. 45, 30, 15. All right, so come on. There we go. All right. So 15, let me see what the 5 looks like. All right. So even like on the 1, you see how like we've got really nice even trading, right? We go up, we come down, right? We've got pretty much a lot of the imbalances mitigated. No, I under leveraged like crazy too. I only put a 0.5%. All right, so on EU, what I'm doing is I'm moving my stop loss to 0830. That's what I'm gonna do. So 0830 is where I'm going to move it to. There we go. All right. So that's how I'm just going to manage it. And I mean, I'm going to take it to realistically, that's where I want to take it to, right up here. So, you know, but it is what it is. I mean, that so far, I mean, I'm at a pretty decent. So I got in right on this candle right here. My stop was there. So I'm already at a 1. Yeah, I'm at a 1.5 to 1 right now, right? 1.5 to 1. So that's not bad. You know, at the very minimum, you know, I'll make 0.5%. So, all right, that works. And what I'll start to do is when I get to this area here, I'm going to start, I may take 10% off just to pay myself, take 10% off. All right, who has anything else they want to look at? So we looked at S&P. Yeah, Jenna, so the only reason I'm not looking up here yet is simply just because I want to take it off of this last up candle, okay? I want to take it off this last up candle just because of the bearish momentum we got off of it. Not to say that area, like keep that area marked up because, you know, eventually when we get past this area up here, that may be an area to look for some reaction, okay? All right, so I think, do you think EU will reach equal highs on the daily? What equal highs? These up here? Or are you talking about these up here? Which equal highs are you talking about? Thoughts on XRP? I have no idea, man. I don't trade crypto. I don't trade crypto. It's there's just way too many things to trade, and I stick to Forex or the indices. All right, so on the 1 hour, you talking about right up here? Yeah, I'll look at USDs. Where are you talking about, Dave? 0880. Yeah, I mean, look, that's my take profit. Yeah, that's my take profit. That's where I'm looking to take it to. Yeah. Yep. Okay. You know what? USD CHF. Absolutely. Where's Mike? You still on the call? Yeah, there he is. Hey, yeah, so look at this son of a gun, bro. Oh, I almost killed myself when I saw this. So this is the setup here. Here we go. This is the setup that we looked at. What was it? Sunday?
Yeah, Sunday.
Son of a flipping goat, man. All right. So let's backtrack it here, right? So here's what we were looking at, right? We were looking at, and this was actually Mike that sent this out. 30 minute, I think it was off the 30 minute. Yep. All right, here we go. So where's the money, right? We were consolidating. We have orders on both sides, right? Orders on both sides. What is our last down candle right here, right?
You can see we have this gets mitigated. We have this next one here. Oh, they're in the areas. I personally am not looking to sell the indices right now. I'll wait till it gets later. I don't like to trade it right now. Anyway, this was the last down. You can see 50% comes in right here in line, right? 97,168. On a fib from low to high, that's also at the 88.6. So liquidity, I want to see liquidity grabbed. There's my bullseye, okay? And ultimately stops were just below this wick, okay? It was 11 pip stop. And we were looking to play up to these equal highs, right? That's where we want to take it to, these equal highs right here. It was going to be a nice 7-to-1 ROI. There's the liquidity grab, okay? Price goes right into our zone and then immediately gives the reaction that I wanted to see, right? Gave the reaction I wanted to see, 16 pips away. I actually had a trailing stop, and I had a 15 pip trailing stop that I just set with the broker and let it run, and ultimately got taken out. That's where I got taken out. And then, of course, this sucker, what time is this at? So it's 6:30 in the morning. So all of London consolidated at 6:30 in the morning is where we finally get the breakaway. And if you notice, what did this candle do? Right? What did this candle do? This candle came immediately right back to the open of the last down candle, right? And I guarantee you that's 50%. That would have been another entry. If I would have seen that, come on. What time was that at? 8 o'clock in the morning. Son of a gun.
I saw that and I didn't take it.
Yeah. So when you guys see stuff like that, immediately, like just do this. All you have to do is whatever time frame it's on, just come here and do this. Go, when you see something like that, circle it and send it to me so I can, because at 8 o'clock in the morning, I guarantee I was getting my coffee. I wasn't even looking at, I was probably turning my computer on. And by the time I actually got on, it was somewhere up in here already. But that's ultimately what happened. It came to mitigate out. The minute I saw this right here, that would have been a good mitigation play out. And then ultimately, you can see what happened. This sucker just went, I wonder if we got another entry. Hold on, let me see. I don't think we did. I think it just shut up from there. Yeah, you can see the imbalance in here, but I don't think it came all the way in there. Consolidate, consolidate, consolidate. What time was that at? Let's see, hold on. What time was that at? That was at 2 o'clock in the morning. So London, and then we sold off New York. So I did have this marked up, and what was it? 4 o'clock in the morning is when the potential entry to sell was, because you could see this was the buy to sell, right? Engulfed, right? This is the engulfing, and you can see price came back, and all. I mean, this I would have market executed on it. Can you guys hear me? Because my internet just said it went down. You guys good? Can you hear me? Awesome, awesome. All right. So what am I looking for USD Swiss franc right now? I don't know, Mike, did you screenshot this and all that for your whatchamacallit? I already did mine, so.
I still have it all marked up.
Yeah, so that irritates me, man. We had it marked up perfectly. We had it marked up perfectly. So US dollar, who's looking at US dollar Swiss franc?
I think we're losing you there a little.
Can you hear me now? How about now? Hold on. What, Jenna? What do you have a chart on it? What are you looking at for it? I mean, for the interim, I'm bearish on it for right now. Let's just see. Hold on. So, bro, look at this. This is just ridiculous. All right. Yeah, do you have a chart on it? Let me see what I got, but not really a previous market. Yeah, I mean, I was done with it. just because of, you know, it hit our TP that we were looking at. But let me just see if I see anything. I mean, I'd be looking for sells. So any selling opportunity is what I'm looking for. All right, so let's see. I want to look in here, see if we have anything in there. Right, all right, so there's a good candle, but now I want to see the engulfing candle on it. All right, so that's been mitigated out of, so now I want to look in there. You know what? We'll make it simple. We'll just come right to like this. There we go. All right, so 5 minutes, 3 minute, no. 2 minute. Do we have anything on the 1? No. All right, so I can't find anything in there, right? Nothing that looks interesting, but we do have this candle right here. So on the 1, we do have imbalance, right? On the 1 hour. We do have this candle right here. So this is 50% of the H1 institutional candle, all right? So now let's see if we can find anything. Oh, no, that's 15 minute. What's the 1 hour look like? No. All right, so that's 15 minute. All right, so 15 minute. Here, all right, we'll go to Victor's 25 minute. All right, there's the 25 minute. That's a nice up candle right there. What's the 5 look like? Tell you what, Victor, I like that 25 minute now. Look at that.
I kind of started looking at other time frames because I realized that everybody else is looking at the 5, 15, the 3, whatever. So I'm like, hey, what if I look at 10, 20,
yeah,
25? And
I mean, it's a difference of what, 8 pips? It's a difference of 8 pips, you know?
Yeah. But look at the body on that thing. It's perfect.
Yep. So stop loss looking somewhere in that area right there. All right. There we go. Let me see what the 3. That's why I started looking at like a 3 and the 2 minute. So the only reason I would like the 15 minute over the 25 minute is because look at the imbalance that we have up here, right? Even at the 1 minute, you can see the imbalance that's in these candles right here. So I would like to see us, I'd like to see price come up to this 15 minute. So for me, that would be my trade setup. That would be my trade setup. I would take an entry there, right? But now where's our targets, right? Where's the money? Where is the money? So hold on, let's look at the 1 hour. So what do we have? What do we have? All right, so TP1 would be that area right there where the money's at. That would be TP2 for me. How does that look? Let's see. U-Swiss moves really slow, so a 40 pip move may take like a week. Let's see. What's the risk on that? 5 pips. So U-Swiss is normally like 2 pips stop loss, so make it like 7. I mean, TP1 is almost a 6-to-1. TP2 would be an 8-to-1. I mean, that's what I would look. I mean, you could clearly see these nice equal lows right here. TP1 would be right back to this area right here. So that's what I would look for.
Can I ask a quick question?
Yep.
So looking at this chart, scroll to your left
Mm-hmm.
where you have you've got the money grab
Mhm.
going on. That imbalance right below it, would you not think that it would go and try to clear up that imbalance as well?
Eventually, yeah. But that's, I mean, I would be content taking a take profit right here. You know, I mean, it's Tuesday. You figure it would probably take to Wednesday afternoon to get up in here, and then this entire move would I mean, here we'll just put it like this. I mean, this entire range took 18 hours, right here. I mean, here, well, if you measure, let's just measure from here to here, which was 53 pips. This is 59 pips. This took an entire 12 hours to do. You know, so I really don't like to be in trades very long. So I'd rather just take my 8% off of this and call it a day. I mean, yeah, absolutely. It could very easily come in to close out that imbalance. And then, I mean, you've got nice equal lows right here, right? You got some equal lows in here, but I'm just looking for that intraday move. You know, if I need to, I'll revisit it. Just remember, this is short term. Long term, U.S. dollar, Swiss franc is bullish. You know, so long term, I mean these should be a focal point right here.
Okay.
You know, some targets. You know, this may be a potential entry down in here for a buy. You know, it's just a matter of when the DXY decides it's going to turn around and do what it wants to do, you know? Does that answer your question, Bonnie?
Yes.
Yep.
Well, part of my when I'm looking at it, I'm trying to see, okay, well, here's equal lows, but then you've got, so where's my target? If you've got, for instance, the equal lows, but then right below that, you've got an imbalance. And kind of what I've been learning from you in the past is if it gets that close, it's going to try most likely to close the imbalance, especially on a fast mover. No,
absolutely. It might. There's the key words right there. A fast mover. this bad boy is everything but a fast mover.
Well, I typically look at just the indices, so I wouldn't have known that. But I was just curious.
Yeah, I mean, it could when it runs these lows to grab the liquidity, that could be the target right in here to mitigate this imbalance. Absolutely. You know.
Okay.
You know. So, I mean, for me though, it's only this from here to here is 10 pips. Yeah. So, you know, I would rather just call it a day, walk away with my 8% and I'm done, you know? But yeah. So this, and Jenna, you know what, your chart was right on. I mean, that's the 97,672. That's exactly where, 97,675 was the entry I got. So, yep, it's right on.
Like UJ's hitting a key point.
UJ?
Let me. Yeah, it's hitting a daily punch.
To sell off?
Probably to buy back up.
Yeah, I don't think it's ready to buy. Let me see what DXY is doing. Let's see. What's Euro doing? Where is?
I think Lex pointed it out. This area it's coming to on his one of his sessions.
Let's see. So let's look at the weekly. All right, so it's not the weekly.
It's a daily.
Daily? All right. Let us see. Yeah, but it's already been technically kind of mitigated out of, you know?
Not on mine.
No? You don't have this down?
I have it off FXCM.
Let's look. Well, I was doing some charting on this. Oh, look, I got it marked off. I got it marked off. Yeah, but look, it's the same, right? Are we looking at the same chart?
Yeah.
I mean, it's technically it's been mitigated out of. It's not a focal point for me. Hold on. Oh, hold on. I'm gonna try and clean up some of this shenanigans. Yeah, here's 50%, right? But this candle's already kind of traded into that body, and so is this right here, you know. I mean, me personally, I'm not looking. I wouldn't take a buy off of this right here.
Oh no, I would not off that candle, but somewhere at some point soon.
Yeah. You know what? Here, hold on. Let's take a look. Let's see if I can find something here.
Because it's been trading in a range, and it's now just starting to pop down. So
yeah. I mean, I had a market. It took all these lows and the equal lows. So let's see. All right. So we don't need that shenanigans. We do know that that's got some liquidity built up in there. All right. So let's do it like this. Let me come back to this. This was the last down. So let's see what we can find in here. Let's go to a 12-hour. So last down. No. All right. So this is the last down on the 2-hour, right? So let's see. I mean, already it looks, yeah. So this candle mitigated out 50%. So we're good, done. And then, all right, so let's go to the 1-hour. Whatever we're looking for, it's got to be in here. So on the 1-hour, I mean, that traded into, it's not 50%, but it traded into the body of it. Let's see, 45-minute. No. So for 30-minute, this traded right back, boom, traded right back, 15-minute. All right, so this might be it right here. Yeah, everyone see the candle I'm looking for, or I'm looking at? That may be the candle, right? Because you could see this is the last down. Price comes up, we mitigate out, right? This is the last down, but we don't even trade. I mean, man, that's close. This is one of those things that it's extremely subjective, right? Whether you can constitute this as mitigating out, you know, because I'm not on that trader's desk. I don't know what Citigroup did or JP Morgan did. You know, I don't know. This very well could have been the mitigation, because you can see from this candle's open, we go, I mean, body to wick, you know, that very well easily could be. The only reason that I kind of like it is because we do have equal lows, right? We do have equal lows. Hold on, let me see. Do those lows get taken out? No, okay. So we do have, right, liquidity. We have a candle. So we have 50%, 15-minute institutional candle, all right? Stops right there. Let's see if we can narrow it down even more though. Oh, all right, good to know, Jenna. Yeah, I mean, I keep most of my stuff. I always throw it in my journal. All right, so 5-minute right? I don't see anything in here. These equal lows need to get targeted. So we know that it has to be below these equal lows. Oh, you know what? I didn't check the 25-minute. Hold on, let's check the 25-minute. Let's see. That could be it. I mean, that's pretty close though to the 15, right? You could see, yeah. I mean, 4.6 and 4.8. It's a difference of 2 pips. So let's see the 2-minute. So here's how we can narrow down if we wanted to twin trade this sucker, right? Here's the 2-minute right in here. So you can see all of this has been mitigated out here, but this has never been mitigated out. Price just took off from it. So you can see the imbalance, right? You can see the imbalance. So we're talking 3.4 to 4.0. So we're talking 6 pips. All right, so this is 50% of the 2-minute institutional candle. And let's just go to the 1 minute, see if the 1 minute has anything. Son of a gun, we can't go that far. 2 minutes, the only thing we got. All right, so that sucks, the data's not there. All righty. So that's what we got. I would look. What are we, 100? We're about 110 pips away. So that's where I would look for the reaction. You know, I would look to mitigate out of those. You know, position 1. Right. Position 1 would be 21 pips. Position 2 would be 10. And then, you know, I mean, targets, I mean, shoot, that looks pretty damn juicy right there. It's UJ, so that would be, this is like a swing trade right here, man. But, you know, depending on what data we get here, I would look for some equal highs. You know, I mean, you could see like equal highs here and here, but ultimately, you know, this is going to get run. You know, so I mean, this is kind of what I would look for. You know, now to be safe, right? To be safe, I would wait. You know, I might take maybe a half lot entry here, and then just wait for smaller time price action to build that trend up and just catch the mitigation off of the first initial move. You know, but that's ultimately how I mark it up. You know, just like that. Go back, see what's been mitigated out of, what they're reaching for. You know, this is the area that they're looking for right in here. You know, that's how I would play it. And it's the catalyst is there because, I mean, realistically, you know, UJ is bullish. This is just the intermittent pullback, right? You know, I mean, if you look at the daily, let's look at the daily. What would that be? That would be, let's see. So from low to high. Man, that's just below the 61. I wonder if we'd go from body to body. Let's see. Body to body. I mean, body to body, that's in between the 61 and 71. So, you know, all right. Who's got anything else they're looking at? I mean, I've got my alerts set. What orders do I have? EU, got the AU there. All right. All right, awesome. That works, guys. Hopefully, you know, hopefully you guys learn obviously some stuff. And yeah, listen, if you guys see anything on the charts and you don't see me posting it, listen, I'm never gonna, you know, give anybody crap. I'm not egotistical. I don't, I'm not going to say, oh, I'm smarter than you or I see it better. If you see something, throw it out there, man. I can't see every chart. I can't see every pair. I did have some stuff on UCAT I was looking at, but I didn't want these lows taken. So yeah. Well, exactly. You're the only one that gets crap, bro. You bring it on yourself. You bring it on yourself. So awesome. Yeah. If you guys have anything else, let me know. And I'll look at this crap. Right off the freaking, what was that? That was an 85 pip move on the Dow off that 50% 5 minute. Oh, well, it is what it is. Who cares? I'm personally not looking at trading NASDAQ just because NASDAQ is really not following any of the percentages. Oh, you know what? One last thing. So I don't know who, oh wait, I think it was Camilla, right? She already left. All right, never mind. She wanted to know about the 15, 80% stuff. Where did this go? This went, oh, Bitcoin. I did take a Bitcoin trade. I was very nice. I did take a Bitcoin trade. I don't normally trade crypto, but I was looking to enter here. I never did that, but I did take an entry somewhere in here. Where did I take it off of? I think off this mitigation point here. I don't know. It's on a demo account. I'm just testing out my my whatchamacallit. So, all right, guys. I will catch you guys later. Enjoy. I'll see you guys tomorrow. I'll be on the charts. So hopefully tomorrow's a little better than today. So awesome. Have a good night. I'll see you guys, man.